news, as if he was listening, President Trump just tweeted this morning. I hope people will start to focus on our massive tax cuts for business and jobs and the middle class, in addition to Democrat corruption. President is talking about tax reform the day before the House is expected to release its details tomorrow of the tax package. We will see what that report comes and looks like. This coming as a recent report by Credit Suisse shows that the number of U.S.-listed companies has decreased nearly 50% from 1996 to 2016. Joining us now is Hodges Funds Portfolio Manager Craig Hodges. And Craig, it's good to see you. Thanks so much for joining us this morning. Obviously, companies are looking at the regulatory environment and, and saying it's too much red tape. I'd rather stay private. Can a tax overhaul stunt the decrease? And what are you expecting from this tax package tomorrow?
Yes. I mean, the point is that the environment to go public has become harder and harder, especially with small companies. It's just not worth it. And with the excess private equity money, there's not the need for the liquidity. Companies will stay private. Plus, if you look at that statistic, it's incredible. 20 years ago, there were 7,600 U.S. listed securities. Now that's like 3,600. There's a lot more money to invest and a lot fewer places to go with it. And I think the regulatory environment has a lot to do with that. Yeah. We're talking taxes. I mean, it's an unlevel playing field. If we delay the legislation to 2022, basically we're saying, well, we'll have a competitive environment in 2022, and we need that now. U.S. businesses need that now. The middle class needs that now.
Right.
It's important.
The Senate came up with it. By the way, Mitch, I think the Russell 2000 index has like 1,800 companies in it. It's not 2,000.
Sort of to that point, if you look at, I guess Sarbanes-Oxley started this, but there are similar regimes around the world. The lack of sort of companies wanting to go public here, is that a global phenomenon, or is that just something that we've sort of regulated our way out of being relevant?
I think it's mostly the regulation. We talk to small companies at Hodges Capital, daily, and there's just not the need to go public. You can get liquidity staying private, and there's a lot more money looking for a home, but a lot less places to go as investors. That's one reason I think you don't see the big sell-offs like we've seen. We haven't had a 5% correction, I think, in over a year and a half. You typically have one of those every year. So that's what I believe is a lot of that's driving the market. There's just more money, and Economics 101, more money and less places to go with it.
Craig, talk about the benefit, though, of the giant regulatory rollback that you've seen during the Trump administration. That is something that the president can do and doesn't have to work with Congress to roll back some of these regulations. Yeah. Talk about the benefit and how that might attract companies here or entrepreneurs to start businesses in the U.S.
Yeah, that's a big factor. Like I mentioned earlier, we see companies on a daily basis. And the last 10 years, you wouldn't believe the rhetoric behind the scenes, that just the anti-business rhetoric that's out there. And that's one reason why companies have been sitting on cash, not investing in new places to go with money. It's just been, almost a toxic environment, anti-business that's out there. And since Trump is elected, you're starting to see the regulations go ahead. I think if we ever do get repatriation of money, then instead of companies just buying back stock, you'll actually see them start investing when regulations do. And you're seeing that in banking. You're seeing that in energy already. You even look at the securities business. It hasn't happened yet, but there's hints that there'll be a little less regulation there. But you'd have to be insane to get into the brokerage business at this point. It's a very, very difficult business.
Are you putting new money to work right now? How do you want to invest in this market as we approach year end and wait for a tax plan?
We do need a sell-off. There's parts of the market that are very expensive, but we're finding a lot of areas that are inexpensive. And so what we're hoping to see, we think a lot of the home builders. You look at that area, that's a good-looking area. We think the airlines are good. Steel companies like steel companies, cement companies, wallboard companies, all trade at very, very low multiples, but yet you are seeing growth. And you see, especially in the high barriers to entry industries like that. So, we are finding opportunities. We'd like to see the kind of the go-go momentum part of the market slow down and come into some of these laggards. And that's where we see the opportunities out there.
All right, we will leave it there. Craig, great to see you as always. Thanks so much.
My pleasure.
Craig Hodges joining us there.